For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies, a leading provider of advanced analytical software solutions, has officially announced that its highly anticipated AIPCon event will take place on Thursday, March 13th. This annual conference, which has become a key event for showcasing Palantir's innovations, will be streamed live for audiences worldwide. The event promises to be an insightful look into the company's expanding influence across multiple industries, featuring both long-standing partners and newly acquired clients. Among the high-profile participants set to speak at the event are global brands like Heineken and Walgreens, along with a host of other companies that have adopted Palantir's technology. Beyond serving as a platform to highlight Palantir's existing relationships, this year's AIPCon will also introduce a wave of new customers who have recently integrated the company's software into their operations. Notable additions to Palantir's growing roster include R1 RCM, Racetrack, Ripcord, Red Cat, Sail Drone, Saronic, SNC, and Ursa Major. These businesses represent a diverse array of industries, but share a common goal: leveraging Palantir's technology to drive efficiency, innovation, and competitiveness, particularly within the American manufacturing sector. In addition to these new clients, several established companies will also be present at the event, including Delta Airlines, L3 Harris, and Wendy's QSCC, further emphasizing the broad reach of Palantir's software solutions. As Palantir prepares for this major event, investors have taken note of the company's valuation and stock performance. With a market capitalization of $184 billion and a current trading price of $78.05, Palantir is considered overvalued based on Investing Pro's fair value analysis. This perception of overvaluation has been a topic of discussion among analysts, particularly as the stock has experienced volatility in recent weeks. AIPCon, now in its 6th year, has evolved into a significant event for Palantir, offering stakeholders an in-depth look at how its software is being utilized across various sectors. The conference will be accessible online, with preliminary content available to viewers 20 minutes before the livestream begins. This accessibility ensures that investors, analysts, and industry professionals have ample opportunity to engage with the insights being shared. Palantir has long positioned itself as a foundational provider of software solutions designed to address the evolving needs of modern industries. In its official press release, the company reaffirmed its commitment to delivering advanced analytical capabilities that empower businesses and government entities alike. The press release also contained forward-looking statements regarding the expected benefits of Palantir's software platforms. However, it was careful to acknowledge that risks and uncertainties exist, factors that could potentially impact the platform's overall performance and customer satisfaction. Unlike promotional material, the announcement of AIPCon was presented as a straightforward update, maintaining a focus on factual reporting rather than speculative claims about how the event might affect Palantir's stock performance. For investors keeping a close eye on Palantir, it is important to recognize that all forward-looking statements are based on the company's current expectations and assumptions. These projections are subject to change as new developments unfold, making it essential for investors to stay informed about ongoing industry trends and market conditions. Beyond the upcoming AIPCon event, Palantir has remained highly active in forming strategic partnerships and expanding its footprint across different sectors. One of its latest collaborations involved Ondas Holdings, which recently announced a partnership with Palantir to enhance its autonomous drone platforms. By integrating Palantir's Foundry platform into its operations, Ondas aims to improve data processing and situational awareness for its fleet of drones. In addition to its work with Ondas Holdings, Palantir has strengthened its alliance with Voyager Technologies to develop artificial intelligence solutions focused on space domain awareness. This initiative is particularly significant in the context of national security, as it aims to enhance the monitoring and management of space-based threats. By leveraging artificial intelligence and advanced data analytics, Palantir and Voyager Technologies seek to improve the United States' ability to detect and respond to potential challenges in the space domain. Palantir's influence in the defense sector continues to grow, with its latest contract reinforcing its role as a key government partner. The company recently secured a $178 million agreement with the United States Army to provide mobile battle stations, further demonstrating its capabilities in military technology. The Titan system, developed in collaboration with subcontractors such as Anduril Industries, incorporates state-of-the-art artificial intelligence technology to enhance battlefield awareness and operational efficiency. This contract represents another major milestone in Palantir's defense engagements, positioning the company as a critical player in national security initiatives. Beyond defense, Palantir is also making strides in mobility management. The company has partnered with ISA, a Spanish firm specializing in sustainable urban mobility solutions. Together, the two companies are leveraging artificial intelligence technology to enhance transportation efficiency and sustainability. This initiative follows a successful pilot program and aligns with broader global efforts to improve urban mobility through smart technology. Despite these strategic advancements, Palantir's stock has faced recent challenges. The company is set to join the S&P 100 index, a move that typically signals strong market positioning. However, concerns over potential defense budget cuts have contributed to a decline in Palantir's share price. While some investors remain cautious, Wedbush analyst Dan Ives maintains an optimistic outlook, arguing that Palantir is well positioned to secure additional government contracts in the near future. There has also been speculation about a potential stock split for Palantir. However, at this stage, it seems premature to make such predictions. Market sentiment can shift rapidly during periods of volatility. Just a month ago, Palantir reached an all-time high, but its stock has since dropped by approximately 30% as the broader Nasdaq Composite entered a correction phase. This level of performance is remarkable, especially when compared to the historical average return of around 10% per year for the S&P 500 index. Some years deliver significantly higher gains, while others experience losses. Wall Street's enthusiasm for artificial intelligence, coupled with Palantir's accelerating growth and emerging leadership in artificial intelligence software, has contributed to its stock's rapid ascent. When stocks experience sharp price increases, companies sometimes choose to implement stock splits, which increase the number of shares while proportionally reducing the price per share. Retail investors generally favor stock splits because they lower the cost of individual shares, making them more accessible to those without access to fractional trading. However, stock splits do not change a company's underlying valuation. They merely distribute ownership across a greater number of shares. For investors, stock splits can make it easier to buy and sell shares by reducing perceived price barriers. Employees who receive stock-based compensation may also find it more convenient to manage their holdings when shares are priced lower. That said, Palantir closed at $78 on a Tuesday, meaning there is no significant sticker shock that would necessitate a split. Additionally, recent momentum in Palantir's stock price suggests that a split is unlikely in the near term. A stock split often sends a signal to the market. If a company's stock is performing exceptionally well, a split can be perceived as a positive move, demonstrating confidence in the company's growth and making shares more accessible. On the other hand, initiating a split when a stock is declining may be viewed negatively, as investors tend to associate lower share prices with weakness. Given that Palantir's stock has declined by over 30% in recent weeks, the likelihood of an imminent split seems low. Short-term stock movements are difficult to predict. While Palantir's downward trend could reverse, there is also the possibility of continued declines, especially if concerns over its high valuation persist. When comparing its price-to-sales ratio to other artificial intelligence stocks, Palantir appears significantly more expensive. Even a powerhouse like Nvidia, one of the most successful artificial intelligence stocks in recent years, reached a peak price-to-sales ratio of 45, making Palantir's valuation seem even steeper by comparison. Should Palantir's valuation adjust to align more closely with its peers, its stock price could experience a substantial decline. It is important to remember that stock splits do not change the fundamental value of a company. Investors should never base buying or selling decisions solely on the possibility of a stock split. Instead, stock splits are most common when a company exhibits strong momentum, robust growth expectations, and a share price that is perceived as too high for easy accessibility. At the moment, Palantir does not meet all of these criteria. While the company has been a strong performer, its current valuation already factors in much of its anticipated growth. With its stock now beginning to correct, it is unlikely that management will move forward with a split anytime soon. In the end, Palantir Technologies has its upcoming AIPCon event on March 13th, featuring new and existing customers like Heineken, Walgreens, Delta Airlines, and several emerging companies using its software to enhance American manufacturing. Despite its expanding partnerships, including collaborations with Ondas Holdings for autonomous drones and Voyager Technologies for space security, Palantir's stock has faced a sharp decline of over 30% from its recent all-time high. With a market cap of $184 billion, and a current price of $78.05, analysts consider Palantir overvalued, especially when compared to AI peers like Nvidia. Speculation about a potential stock split has surfaced, but given Palantir's recent downtrend, a split seems unlikely in the near future. While the company continues securing defense and AI contracts, concerns over valuation and market volatility remain key considerations for investors. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.